Hey there, fellow investors. Today, we're exploring Warren Buffett's intriguing history with McDonald's. Yes, that's correct. Even this investment giant has experienced ups and downs in the volatile stock market. Let's journey back to the year 2003. It was an era of global economic change, and amidst this, Buffett, a seasoned investor, remained resilient. Known for his love for fast food, Buffett had a fondness for McDonald's. This was a brand he'd invested in, enjoyed, and profited from. But, in 2003, something unexpected occurred. Buffett sold his McDonald's shares, a significant portion of his investment portfolio. Why? What caused this rift between Buffett, highly revered as a wizard of suitable investments, and the ever-present fast food behemoth, McDonald's? Was there a disagreement on corporate strategies, or an unknown underlying issue? Did McDonald's lose its appeal in Buffett's eyes, or did a problem threaten their mutual relationship? These questions have intrigued investors, and today, we're here to clear the confusion. We'll guide you through Buffett's investment history, tracing his relationship with McDonald's, and answering the many questions it has stirred. We're set to dive into financial history, unraveling this intriguing story with some speculation and insider perspectives. Buckle up because we're about to uncover the juicy details. You see, Buffett isn't your typical sell-it-and-forget-it kind of investor. He's much more nuanced, a kind of financial sage who views his portfolio with a long-term perspective that is rare in today's fast-paced world of high-frequency trading and split-second decisions. Rather than being a flippant trader, dispassionately buying and selling stocks based on fleeting market trends, Buffett is more akin to a seasoned mariner navigating uncertain seas, ever remaining steady at the helm of his investment ship. Think of him as your wise old grandfather, the one who's seen everything and nothing and who holds on to things for dear life, believing that patience is not simply a virtue, it's a strategy. This is particularly true when it comes to his approach to stocks. He doesn't just see stocks as simple financial assets, he sees them as pieces of a company, chunks of a picture that he has spent a lifetime trying to fully understand. Now imagine this, he's been holding on to shares of companies like the Washington Post since 1973. That's not just a few years or even a few decades, it's almost half a century. That's longer than some of us have been alive, longer than many modern companies have even existed. It's an investment tenure that is virtually unheard in the contemporary world of finance. But this is not to say he's simply stubborn or inflexible. No, far from it. Here's the interesting part. Buffett doesn't just hold on to stocks for the sake of it. No, he's not some hoarder of stocks, blindly clinging to his investments out of some misguided sense of loyalty. On the contrary, he's got a keen eye for sniffing out the best opportunities in the market. He's like a seasoned hunter, patiently waiting for the perfect moment to strike. Back in the day, if he found something he liked better, he wouldn't hesitate to bid adieu to his old investments. It was always a reluctant goodbye, mind you, but a necessary one. It was about making room, about hello to shiny new investments that promised even greater returns. It's like trading in your old, much-loved toy for the latest and greatest gadget. Only in Buffett's case, these toys he was trading in and out of were worth billions. It's like trading in your old toy for the latest and greatest gadget. Except Buffett's toys are worth billions. But back to McDonald's, with its iconic golden arches illuminating every street corner around the globe, you might naturally assume that Warren Buffett, the renowned investment maestro, would be absolutely enthralled, right? Surprisingly, the answer is no. Although he does view the fast food Goliath as a robust business model, he remains unconvinced that it possesses the same enduring power as of his other favorite brands such as Coca-Cola or Gillette. Now you might be wondering why. Isn't McDonald's a popular brand as well? The answer lies in the subtle nuances of consumer behavior. When it comes to everyday consumer products like razors or sodas, people tend to remain loyal to their chosen brand. They often stick with what they have tried, tested, and loved over a period of time. It becomes a part of their routine, a comforting in the whirlpool of life's uncertainties. But with food, the situation changes. The dynamics of food preferences are different, quite unpredictable in fact. Of course, we all have our favorite eating joints, our comfort food places where we could go to satiate our hunger pangs without giving it a second thought. But the realm of food is a vast aromatic world that beckons us to explore. A new cuisine here, a new dish there, the lure to experiment is always present. We humans are not afraid to mix things up, to try out a new restaurant that just opened up, or to order a new dish that we have never tried before. That's not all, there's also the matter of real estate. McDonald's, apart from being a food chain, is also one of the world's largest real estate companies. Warren Buffett, with his astute business acumen, identifies this as a complex issue. He likens McDonald's to a garbled knot, one that's impossible to disentangle. If you consider the sheer number of McDonald's locations scattered all over the world, it's easy to understand his point. The attempt to separate the real estate aspect of the business from the franchising part, akin to trying to unscramble a scrambled egg. It's not just messy, it's downright impossible. It's a task that is not only daunting but also has the potential of creating a lot of chaos and confusion. So, yes, McDonald's does seem to be a solid business model, but it's not without its share of complexities. And then there's the whole real estate thing. Buffett reckons McDonald's is like a tangled knot that's impossible to unravel. With thousands of locations all over the world, trying to separate the real estate side of the business from the franchising side would be like trying to unscramble an egg, messy and downright impossible. But hey, it's not all bad news for Mickey D's. You may be wondering why, so let's dive right into it. The answer is simple. Warren Buffett, that's right, the world-renowned business tycoon and investor, praised McDonald's for its unique role, a role that is not commonly associated with a fast food chain. Buffett admires McDonald's not merely as a provider of quick, tasty meals, but as an educator, a mentor, a guide. This might come as a surprise many. After all, who would look at a fast food joint and think of education and learning? But Buffett's wisdom is derived from decades of an acute observation. He's not talking about traditional classroom education, instead, he's highlighting the less noticed yet valuable life skills that McDonald's imparts to its employees on a daily basis. According to Buffett, McDonald's is a better educator than some swanky, highfalutin university. You may find it amusing, but let's give it some thought. Universities impart knowledge, but McDonald's instills some of the most critical soft skills needed in the real world: punctuality and discipline. For many young people starting out in their careers, it's their first job, their introduction to the world of work. Lessons they learn here, the values they imbibe, lay the groundwork for their future endeavors. It's a unique perspective, isn't it? A fast food chain molding the future workforce. But that's Buffett for you, always looking at things from a different angle. Now let's look at the other part of the story, the love affair that wasn't meant to be. Buffett's relationship with McDonald's, both as a consumer and as an investor, has been a roller coaster ride. It's a tale of love, loss, and the ever-evolving dynamics of the stock market. The changing fortunes, the ups and downs, it's all part of the grand narrative. Will the tale have a happy ending? Will Buffett and McDonald's reconcile? That's a question only time can answer. As keen observers, all we can do is wait and watch. Maybe one day they'll reconcile, their differences ironed out. But until that day comes, we're left with the rich, intriguing tale of a love lost. So there you have it, folks. The tale of Buffett's heartbreak with McDonald's. It's a story of love, loss, and the ever-changing landscape of the stock market, and who knows, maybe one day they'll kiss and make up. But until then, we'll just have to wait and see. Thanks for tuning in, and happy investing.